All right, let's dive in. Today, we're going to tackle something that, let's be honest, can look like a totally different language, a technical stock report. And we're going to demystify it by focusing on just one company, ARMN, as our case study.
Have you ever pulled up a financial report and just your eyes immediately glaze over? Yeah, you are definitely not alone. It can feel like you're staring at a wall of numbers and weird acronyms and charts, and it's just overwhelming. I mean, seriously, look at these terms: SMA, MACD, stock RSI. It's like a bowl of alphabet soup, right? This is exactly what we're up against. But here's the secret. You don't actually need to be an expert in every single one of these to get the main story. You just have to know which clues to look for. And that's exactly what we're going to do. Think of us as detectives for the next few minutes. We're going to break this thing down, piece by piece, and figure out the story that this report is telling us about ARMN.
Okay, first things first, before we get lost in any of the details, we have to get the big picture. And the most basic fundamental question you can ask is, which way is the stock generally heading? Up, down, or sideways? This is what we call the trend. So our first big clue is this number right here, 91.32%. So what does that actually mean? Well, it tells us that ARMN is currently trading in the top 10% of its entire price range for the last year. It is pushing right up against its highest point, and that is a really powerful sign of an upward trend. You know, there's that old saying on Wall Street, the trend is your friend. And it's a classic for a reason. Understanding the main direction of a stock is the foundation for everything else. Every other piece of data we look at has to be seen through the lens of this trend. So how do we confirm this trend? A super common tool is the simple moving average, or SMA. The easiest way to think about it is like this. It irons out all the little daily bumps and wiggles in a stock's price so you can see the cleaner, underlying direction it's been moving. And wow, when you look at the numbers for ARMN, it's crystal clear. The report shows its average price over the last 20 days was $15.57. Now compare that to the average price over the last 200 days, just $8.61. When the recent price is nearly double the long-term average, that's some serious confirmation of a strong upward trend. Okay, so we've got our direction of travel. We know the car is heading uphill. But the next question is, how hard is the foot on the gas? How strong is this move? Are we accelerating hard or just kind of cruising? That's what analysts call momentum. And a go-to tool for this is the Relative Strength Index, or RSI. Just think of it like a speedometer for the stock, on a scale from 0 to 100. Generally, a reading over 70 is considered overbought, meaning it might be getting a little overheated, and below 30 is oversold, which might suggest it's a bargain. So, where's ARMN on this speedometer? The report clocks it in at 60.33. But what does that number actually tell us? While a reading of 60.33 is kind of a Goldilocks number. It's strong, it's clearly showing positive momentum, but it hasn't crossed into that 70-plus overheated zone yet. This suggests the upward momentum is pretty healthy and sustained, not necessarily at a crazy, risky level. All right, so we know the direction and we know the speed. Now what about the road itself? Is this a nice, smooth highway we're on, or is it a bumpy country road? In the market, this is called volatility. It just measures how much a stock's price is swinging around. And a really cool way to visualize this is with something called Bollinger Bands. Seriously, just picture them as guardrails on the side of the road for the stock price. When things get volatile and bumpy, the guardrails get wider. When the ride is calm and smooth, they tighten up. So this report actually gives us the precise positions of those guardrails for ARMN. The upper band, which is kind of like a price ceiling, is at $17.30. The middle band, that's our 20-day average again, is at $15.57. And the lower band, the price floor, is down at $13.84. This gives us a really clear trading channel. ARMN's price right now is $15.81. So you can see it's sitting nicely in the upper half of that channel, somewhere between the middle line and the top guardrail. And that's exactly what you'd expect to see from a stock that's in a strong, healthy uptrend. Okay, so we've gathered all our evidence. We've looked at the trend, the momentum, and the volatility. Now it's time for the final step in our investigation, putting all the puzzle pieces together to see the full picture. And this is where it gets really practical, right? The report boils it down to two key price levels you've got to watch. First, there's a resistance level at $16.43. Think of that as the next hurdle or ceiling it needs to break through. And then there's a support level at $15.23, which is like a safety net or a price floor. Traders watch these levels like hawks. Now, the report also gives us this overall momentum score. And this is interesting. Check this out. The score is 51.21. That's just a hair above the neutral mark of 50. This is a subtle clue that even though the trend is strong, the overall momentum might be more steady and cruising rather than wildly accelerating.
So, what's the final takeaway from our investigation? Well, when you put all the clues together, the story is pretty clear. The evidence points to a stock that's in a strong, well-established uptrend. It's got healthy, sustained momentum. It's not so hot that it's screaming danger, but it's more than strong enough to confirm that positive trend. It's a pretty balanced, positive picture.
And that right there is the most important thing to remember. A technical report like this is like reading a history book. It's a detailed story of where the stock has been. It gives us clues, it gives us probabilities, it gives us key levels to watch, but it never gives us guarantees about the future. So the real question it leaves us with is, based on all this evidence from the past, where do you think it might go next?